Boom! What's going on, Investomaniacs? Your boy, Knight Rider here, and today we've got a twofer for ya. We're talking about Sirius XM and Salesforce, two companies dominating their respective markets. Up first, we've got Sirius XM, the radio powerhouse. Sirius XM should be a familiar name to anyone who listens to radio, and probably most of you who don't listen to radio, like me. It's like I still know what Sirius XM is. It's a satellite and online radio provider which came into being in 2008 with the merger of the two baby companies, Sirius Radio and XM Radio. Okay, maybe they weren't baby companies, but the merger created the single entity, the massive subscriber base of about 18 million users. A move which brought considerable controversy due to cries of "Monopoly, Monopoly, don't pass go for 200" from lawmakers and competitors. Today, Sirius XM remains the major player in the satellite radio game and radio in general. They are a major player with over 34 million subscribers. The company made headlines earlier this year with its acquisition of the music streaming service Pandora. Remember that thing? Remember that company you used to listen to before Spotify, which is itself used by about 66 million people monthly. Sirius XM has also announced a new entertainment interface known as the 360L, which will make its way into several GM vehicles next year. That is how Sirius XM gets a lot of their business, by the way. They create partnerships with various vehicle manufacturers, and they have like a free subscription for a while, and then it expires, and some people like it, so they renew. While other music services like Spotify tend to get a little bit more attention these days, Sirius XM remains relevant. It's a very profitable company, solid margins of 28%, and still growing the top line. The most recent quarter was a solid top line growth, and in 2018 it grew at 6.4%. And if you just look at the numbers, you'll actually have thought that Sirius XM grew revenues at 27%, but that was due to the Pandora acquisition. So if you redo the numbers for Pandora being in there the whole time, it was actually about 10% top line growth. Similarly, it will show that net income decreased 44%, but again, that was due to the Pandora acquisition. But again, that's actually only not true if you believe the Pandora acquisition will work out, which I'm not a big fan of the Pandora acquisition. So maybe this is a little bit more truthful than it seems. Anyway, Sirius XM also pays a dividend of 0.87%. So should you be in Sirius XM? It's not my cup of tea. I don't think the paid subscription satellite radio business is safe enough to invest in from a value investor standpoint. There's other places I would go if I were a value investor, and I think the large majority of growth is behind the company. At least, obviously, I'm talking about high velocity growth is behind the company, and therefore I don't think it's a good candidate for growth investors. I'm not a particular fan of the Pandora acquisition. Spotify has fantastic management, and I don't want to be invested in any company going head to head with Spotify. And that goes for their satellite radio business and their Pandora acquisition. Just in general, I don't want to be in radio if it's not Spotify. That's not saying that you should invest in Spotify, but I'm saying I don't want to go against Spotify. If the company were particularly cheap, then okay, I could look past that and say, well, my retention concerns, would still make sense for a value investor if it were cheap enough, but at 24 times earnings, the stock isn't particularly cheap. Moving on to Salesforce, another company with a notable dominance in its industry. Salesforce is a cloud-based software company specializing in CRM, also its ticker symbol, or customer relationship management services. Basically a streamlined way for companies to connect with their customers, nowadays mostly online. CRM is where Salesforce makes the biggest chunk of its revenues, which is good considering Salesforce controls 19.5% of the global CRM market. Dang. And also because CRM itself, the space itself of customer relationship management services, that space as a category is still growing very quickly. Salesforce is currently crushing it, with SAP, its nearest competitor, making roughly half of what Salesforce is doing. There are naysayers against Salesforce, however, particularly because of Salesforce's recent $15.7 billion acquisition of Tableau, a data visualization software company, has prompted pessimism from some investors who believe Salesforce may have overpaid. Now, here's what I will say. I used to own Tableau. I sold it sometime in the last couple months. I can't remember exactly when, because I thought it was getting a little pricey. Having said that, I trust Salesforce more than I trust myself, right? So maybe I thought it was getting a little bit pricey, but that doesn't necessarily mean that it was pricey for how they could integrate it into their business. So maybe I was just reading the metrics wrong. Maybe I wasn't sophisticated enough of an investor to be able to see the value in it, and maybe it really wasn't overpriced like I kind of thought it was. Or I think or is just simply that Salesforce has a use case for Tableau, and Tableau may be worth more to Salesforce than Tableau is worth on its own. Salesforce stock nonetheless dropped about 8% at the announcement, an unpleasant surprise for a company which prides itself on growth and consistency in making good decisions and acquisitions. This May, so just last month, Salesforce also suffered a devastating outage on one of its servers, which allowed for several companies' private data to become public. Not only a terrible incident for the company's image, but also a very expensive mistake which cost clients millions and millions of dollars in losses. Despite these setbacks, however, the key to reading Salesforce is looking at the big picture. Right now, there's a little bit of kind of bumps in the road, but hey, I consider it big term. Looking at the big picture, I think Salesforce is a buy. Salesforce is comfortably dominating a major industry, and the temporary pessimism over this acquisition and the data breach, in my opinion, is a buying opportunity. Every single time Salesforce has stumbled in the past, that resulted in a dip in the stock has been a buying opportunity. I do not believe this is any different. Digital integration and business intelligence are booming fields, and Salesforce is aggressively moving itself into and keeping itself at the forefront of these areas. With Tableau, Salesforce now has its hands in data, customer service, and integration, making it a versatile and innovative company. I encourage young investors to think about growth and push themselves to their limit of risk tolerance. Many investors simply do not possess the risk tolerance to hold on to spec stocks and small cap stocks and micro cap stocks, etc. Salesforce is a large and established company, but also one which still has strong growth. I say buy the dip. Until next time, Investomaniacs, may the market be ever in your favor.